Hey folks, Rick Crawford here, Arkansas 1st District. We're talking about coronavirus this week. How do the ag markets work? Well, sometimes they don't. I mean, the idea is to try and make them work. So what we need is for more people to participate in the ag markets. Right now what we see taking place a lot of times are price discovery that is devoid of any involvement of farmers to some degree. That's a problem. So you see greater volatility in the ag markets because you have hedge funds in many cases taking either side of the trade. Neither one of them are underlying the market with actuals. And what that means is you don't have a crop in the field. You're not a farmer. And so ideally what you'd like to see happen is you plant X amount of acres and you implement a hedge strategy that locks in a price for those acres. Open futures contracts, which are common in the market, probably not the best idea for producers because as the markets move, sometimes you got to put more money in your margin account to maintain your margin account, which backs these futures contracts in case they move against you. Whereas options are a fixed cost on the front end. So I would always encourage farmers to use options to lock in a price. That puts in their safety net. But you might be risk averse on the supply side and not so much on the output side. For example, if you're feeding cattle, your risk aversion may be corn. You want to buy a call then and not a put. Producers understand these terms for the most part. The problem is we don't use the markets. Producers don't use the markets as much as they should. So I would like to see farmers really start to think about how they can improve their operation by putting their own safety net in, using those commodity futures markets with options. For example, if I'm growing cotton, I'm worried about the market going down. If I'm worried about the market going down, then I might want to think about a put option strategy that locks in the price. If the actual cash market falls below my futures price that I have locked in, I reserve the right to sell at that price. So what you'd want to do is use that as a strategy that says I can do no worse than X. So if the markets go up, yeah, you've lost a little on that option, the premium of that option. However, you're going to make that back in the cash market, and so that loss would be negligible. Typically when the markets crash, they fall, there are limits how far a market can move the course of a given day. When you start to see the markets go limit down day after day after day, you might consider that to be a market crash. If you start to see markets all going in the wrong direction, they're all going down at the same time, you might consider that a market crash. But each individual kind of probably defines a market crash on their own terms because it may affect them individually in their bottom line. The ag markets have pretty well weathered the storm. I was looking at the markets a little bit ago, and so relatively stable, comparatively speaking, where we've seen pretty major sell-offs in the stock markets. The real indicator is the S&P 500, so when you start to see it really start to go in the wrong direction, they'll stop once it reaches a percentage, I believe, of 7%. They stop trading for a period to give the traders a little bit of time to do some background. Are we reacting emotionally? Are we reacting because the market is telling us to do this? Or are we in panic mode or whatever? And so that's what you saw happen on Monday, where we saw the S&P drop 7% and they ceased trading for a period of time to allow those traders to kind of, collect their thoughts, do a little research, do some background. What are we basing this on? And is it realistic, borne out before we go back and start trading again? Well, it used to be that back in the day, and particularly, this was true during the Depression era. In fact, that sort of contributed to a lot of the economic downturn was the inextricable link between the ag economy and the general economy. Today, it's a considerably smaller part of our total GDP. It's important. But let's be honest about it, there's less than 2 people of the American population that are engaged in production agriculture. And so it is not nearly as significant to our overall economic output as other industries. And so because of that, it tends to not follow what the other markets are doing nearly as much as it used to back 100 years ago or so. And so I think probably, I don't anticipate there being a huge downturn. In fact, In Argentina right now, this will have an impact on soybean markets. There's a big farmer strike taking place, and they're not selling any soybeans. What that means, it's an opportunity for us to liquidate some stock and holding that we have some carryover, and clear the way for greater opportunity going forward. So maybe we'll get to pick up some of that soybean trade that otherwise maybe Argentina would be booking right now, but they've stopped because of a farmer labor dispute. And so that's an opportunity for us to do a little profit taking here in the United States. It's not just Corona. I mean, you drop a pebble in the pond here and you see the ripple effects. What you're going to see is the economic impacts of coronavirus more so than the medical impacts of coronavirus. That's what I think we have to be prepared for and geared up for. That's not to dismiss that it's important that we respond appropriately on the medical side. It's certainly a public health issue. But keeping in mind that our response will largely dictate the economic response. That is a lot of the reaction that we're seeing right now is just the what could happen scenario. Hasn't really happened yet, but it could, and there's a little bit of fear in the marketplace as a result. This really exemplifies, as much as anything, why we need to really withdraw from this dependence on China for critical things like medical supplies, the personal protective equipment that our hospitals, even back home in the 1st District, are saying we've got to have this, we don't have adequate protection. The masks that we need, we can't keep pace with the demand. Most of the resources that, the raw materials are, if they're not even being manufactured in China, most of the raw materials are coming from China. And then of course our pharmaceuticals, particularly our antibiotics. This is a real concern. This should be a serious wake-up call for the American people to say, we need to think about how we ramp up production of these critical resources here in the United States and not be dependent on countries like China.